The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good day, money masters and treasure hunters. Welcome to the March 30th magnificent Monday edition of Hour 2 of the Trader's Edge. I'm your host, Steve Rhodes, and hope that you're off to a great start of your day. Let's make sure that you and I, that we do everything we can to have a magical and magnificent Monday, of course. Let's always remember what's talked about is a dream. What's envisioned is exciting. What's planned becomes possible, but what's scheduled is real. And I want to thank you for scheduling your time with me here this morning. I'm absolutely here to serve you, so feel free to dial on in at 877-927-6648. Of course, internationally, you can reach out to me at 727-445-1044. Remember, if you've got a question, someone else has got that exact same question, so don't call in for yourself. Don't call in for me. Call in for that other person. A random act of kindness. That's the way to begin your day, each and every day, your week. And, there's nothing like Magical Monday. This is, of course, Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trading up 267 points at 17,979. S&P is up about 21, trading at 2,081. Composite up nearly 40 points at 49.30. Russell's up 10 points right now. DAX is up 187 points. The FTSE up 32. You've got gold back $13 and change. Silver's off 29 cents. Light sweet crude off 52 cents as we speak right now. All right. Now, if you didn't catch the first hour, we really took a look more so at longer-term patterns that are out in play. As you know, I was calling for the next bottom in the market to form today or tomorrow. Actually, looks like it took place on Thursday of last week. That says the markets move higher for the rest of this week here. We do have a shortened holiday trading session, so the markets are closed on Friday. So the expectation should be that the markets will continue to motor higher for the week. Then I expect things to level off a bit, level off to move slightly higher up through about April the 14th, and then boom, bingo, take off and move all the way up into that May 4th time frame. So that's our roadmap. Until we see otherwise, that's roadmap that we should expect ahead for us inside of these markets. Now, with regard to on the intraday time periods here, we've got kind of some interesting charts. Now, when I say intraday, I'm just looking at some 30-minute charts out here. And if we take a look at coming off of that low on Thursday out here at 5:30 in the morning, that's when we all, I don't know, depends on what time you woke, but you woke, and I think that's when you had the news that Saudi Arabia was starting to bomb. And so the war is just continuing to get larger and larger over there. But there was still a bottom that formed inside our marketplace. This was at 5:30. So since that point in time, we've seen the markets move higher off of those lows. Now, if we just simply take a look at our seventh wave count out there, and we just simply come off of that low, we're in that seventh wave as we speak right now. Now, we do not have a and I don't know if it's a seventh wave or if it's recycled into something else. I'm just saying it's something for us to be paying attention to. So we are inside that level as we speak right now. We have seen inside the NQ, if you're watching this on Tiger TV, we've seen price move higher with less relative strength as well as we came into this session right here at 10 a.m. That alone is not a reversal signal. We have to see how things play out here during this next 30 minutes and then some follow through to the upside. We can see that TAS market profile, you're trading back inside there. So expect the markets to just kind of, we're in that seventh wave where we may be in it. This won't confirm, really can't confirm now until 11 a.m. At best out here. But so the markets ought to take a little bit of relief. Here's the thing. If we do confirm an intermediate term high out there and then we take it out, boy, that's just another signal that the markets are going to move higher out here. And we might get that clue. We may have already gotten that clue from the Dow. But I'm going to first put up the S&P futures contract, its 30-minute chart as well. And we take a look at its 30-minute chart, we're going to see that same kind of pattern out here. No matter how we do the counts, we see that same pattern, and we are in that seventh inning stretch. Now, inside, let me just recycle this chart out here, make sure I've got the current date out here, but I do not believe. Oh, we do have a price relative strength divergent pattern as well that is underway as we speak. Again, that alone is not any indication that any kind of top or anything is inside the market. Just that we are now at a stage in the game here where the markets can move sideways, pull back, and then perhaps take out those highs to continue to motor higher. So that's the 30-minute message inside of the ES Mini. You're just in the cautionary-ish type zone out here. But here's the deal. We take a look at the Dow futures. The Dow futures from that same price level, that's at 5:30 in the morning. That goes back to, when was that? That was last Thursday, I believe. Don't do that to me. That was on March the 26th. Yeah, that was last Thursday. If we take a look at it, it's blown through that. It's blown through that seventh inning stretch pattern at 4 o'clock this morning out here. Well, it wasn't at 4. It blew through it as we came on the air at about 9 o'clock, between that 9 and 9:30 level out here. So the Dow futures, and the Dow's kind of arguably been somewhat weaker than, we'll call it the New York Stock Exchange. It certainly has been weaker than the New York Stock Exchange. The Dow itself may be the one that has really given us a signal that there's not going to be a whole lot of let up off of the gas pedal between now and this coming Thursday out here. So so it's important to take a look at the shorter term as well, what is going on there. So that's the 30-minute charts covering those 3 index futures. Now, let's go take a look at what's going on inside of the S&P 500. We'll go back. We'll come back. We'll take a look at the. Let's just do this. Let's go take a look at what's going on inside each of the 4 index ETFs out here, just to get a feel for what we've got. So let's start off by taking a look at the Qs. What do we know about the Qs out here? The Qs here come back last Thursday, and they test that swing point from March the 13th. Now, March the 13th has volume of 42 million shares. It's tested with what? 47 million shares. Here's the beauty about the volume inside of the Qs. The Qs make bottoms with volume out there. It is a characteristic pattern that is beautiful. Now, you like to see it make bottoms with big volume out here, as it did on October 15th. 108 million shares out there. Shoot, we can go back and take a look at other bottoms inside of the Qs. You can come back here and take a look at April 15th. 84 million shares. Somebody might have said, hey, price is going to come back and test that. That's not how it works inside the QQQ ETF. It hasn't worked that way for years and years and years. You've got to go with the current cycles that are out there, pattern-wise, and when you start to see volume as lows are being made, as patterns are being formed, those are important buy signals out here. So inside the market, now, it's not 80 million, it's not 100 million, but what it was 47 million shares. It rejected price out here. It looks to me like that is our next bottom. When we take a look at the bottom that was formed on February the 2nd, what kind of volume out there? 44 million shares. That's why I say, hey, the 40s may be the new bottoming signal versus the 100 million, 80 million share count out there inside of the marketplace. So now what do we expect inside of the Qs? One of 2 things out here. Number one, you do have this little gap that took place in between February 12th and February 11th. Let me go ahead and put the market profiles on my screen for us as well. So let's do that out here. What we can see with regard to the Qs, they've bounced right into resistance of its TAS market profile high. That number is 106.82. So the all-important message, whether it's today, whether it's tomorrow out there, is going to be 106.82. If there's going to be a failure, we've got those 30-minute charts that are saying, hey, Steve-O, you may be in that 7th inning stretch pattern out there. And then when we take a look at the ETF structure, hey, guess what? You might be up against resistance of its TAS market profile high. When we look at this box here, this TAS box, this doesn't tell us whether bulls or bears have control. It looks pretty much equally spread between the resistance, the support level, and its point of control out here. So what we do know is support is support, resistance is resistance until one of them gets taken out. If we see it close today, tomorrow, whenever it is, above 106.82, then resistance will have failed. And just like the last time that we saw resistance fail inside of the Qs back here, as we came off of the lows in February, resistance basically failed, certainly with any significance on February 10th. The market went ahead and moved higher. That's what we have going on now. That's what I expect that we will see. And what we will see is an A to B equals CD to the upside. That A to B equals C to the upside pattern, that's going to take us to a price point of approximately 113.91, probably 116.54. The key level to be watching, no question, is going to be 106.82. That's what's going on inside of the QQQ ETF. Let's go take a look at the Russell 2000, the IWM. What did the Russell 2000 do last week? The Russell 2000 gave us the best message overall. Why do I say that? We'll take a look at the breakout session. Well, let me do this. It's easier if I do this. Let's take a look at the breakout session that occurred inside of the IWM. The IWM had broken out on March the 12th. It did it with 41 million shares. It came back last Thursday with what? Hello? 27 million shares. If the market was going to crater, you would have seen the IWM kind of leading the charge. When I say kind of, the heck with kind of. You would have seen the IWM falling apart, leading the charge to the downside. I mean, the boogeyman in the room is what? Is higher interest rates, right? I mean, that's all that I hear. The boogeyman in the room is higher interest rates, which is the most insane thing. Look, let me kind of give it to you. You already know this. Interest rates are going to rise. I can't tell you when. It doesn't matter whether it's June, it's September. It doesn't matter. Interest rates aren't going down. Interest rates are going up, at least from the Federal Reserve's standpoint out here. We'll see what the market wants to do, but interest rates are going to go up. And if they go up by a quarter point out there, you're not going to go ahead and change your portfolio allocation. What you're going to do is you're going to expect all the boogeymen and everybody on TV and everybody telling you that that's it. The top was in, and you're going to wait for your next buying opportunity. You're going to take advantage of that. That's just simply going to be nothing more than the retail stores telling you we're going to have a sale. You know, we're going to have an Independence Day sale. We're going to have a Good Friday sale. You know, that's all that the markets will really be communicating to us. What did the IWM? It did not fall apart. It came back. It tested that level of support. It did it on lighter volume. Now what the IWM is doing is, it already has a confirmed A to B equals CD to the upside when the IWM took out the March 2nd high, which had 29 million shares, and it took it out with 40 million shares back on March the 18th. The larger A to B equals CD to the upside inside of the IWM. That's going to go ahead and where did that go? Why did that come off my screen? That's interesting. I'll have to check on that while we're going into this break here. This is Steve Rhodes with TFNN. I'll be right back, folks.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risks, charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 250, S&P is up 18, Composites up 32. Let's go to the capital in California, to Sacramento. Audrey, thanks for calling. Thanks for holding. How you doing this morning?
Good, thank you.
Excellent.
How are you?
Excellent. Are you a native of California?
No, I'm actually from New York.
Wow, that's a long trip. How long have you been in Sacramento?
About 8 years.
And which do you prefer better?
Well, you know, they're both really, really good. Sacramento's kind of like a mini Manhattan melting pot.
Oh, okay. That's good. And the weather's a little bit nicer probably this time of year.
It is.
Oh, that's great. You had some questions about the NASDAQ and the S&P 500.
Here's my specific question. We're looking at this end of April, or say early May, a little bit of a correction before we move on. And by the way, May 1st is a Friday.
It is. Thank you. Okay.
Yeah. And so I'm thinking that, and I want to see what you feel, I'm thinking that old NASDAQ composite high of around a little over 5,100 might be hit at that point before that correction happens. That might be a target. I don't know if you agree. And if that happens, I'm seeing. I was listening to that number you mentioned for the S&P of 2174 minimum.
Yes.
I'm thinking it might not hit that high if we're hitting that NASDAQ target. It might go. The S&P might maybe go a little lower than that, unless it just does a higher percentage than the NASDAQ. So I'm wondering what you're thinking.
Well,
I'm
so
looking
it's
at like a goal for the S&P.
Yeah. Well, so you started off with the NASDAQ, and you mentioned that high, which is in the 5,100 level. To be specifically, let me put this on a monthly chart here real quickly, just so I can give the folks the number that you're talking about. So the number that Audrey's talking about is the high from March of 2000. And I would give you that number if I had the box on my screen. That would help. Okay.
I think it's around 5130, but I'm not sure.
You're right. 5132.52. Now, if the NASDAQ is able to get above 5,055, that's really the level that we should be watching. Then what it really offers to both you and I is most likely a move to about the 5405 level inside of the composite. With regard to trying to time it with regard to, where price takes us into that May 1st, May 4th type area out there, that one's a little bit more difficult to call, because the tool that I use helps me to understand when tops and bottoms, short-term, intermediate term, begin. It doesn't help me to really gauge the advance in price. What we have to take a look at for advance in price, what I like to look at, is A to B equals CD tools or Fibonacci, or these horizontal trading range lines that we're looking at on my screen right now. Now I'm going to switch this back to a weekly time frame. just since it will widen it itself. And
Can I ask you a quick question?
You can, absolutely.
Do you expect some kind of correction when the NASDAQ does reach that old high? Or a small, or something larger than that?
Well, at 51.32, I would say that you're likely to see price. When I take a look at these horizontal trading range boundary lines, and I'll use those as more of a magnet than the old high out there. I would think that there's more of a celebration that it takes out that high, and that what you see is a spike into about the 52.30 level. If we are moving into, so here's the assumptions we have to go with. First of all, the hurdle that the composite has to clear, without a doubt, is 5,055. If it does that, then that's what offers the promise of 52.30, which is the midpoint on the weekly chart of its horizontal trading range boundary areas. If in fact we don't get above 5,055, the markets will continue to chop around out here. But that's going to be, I think, the real first, as opposed to 51.32, the real key number for you when it comes to the NASDAQ composite is going to be that 5,055 level.
Gotcha. Okay. That makes sense.
Yeah, and then if we see it, if price is moving and it's well before May 1st and it's into that 52.30 level, and it's coming in with like a wide-ranging bar, I would say on a weekly basis, then you're looking at the 54.04 area. Now back to the S&P, because I think you were also asking about that. Is that correct? Right. So on the S&P, if we take a look at its similar type levels out here, and again on the monthly chart, the S&P has given us the message that it's already cleared its last level of resistance, which was 2,042. The next level it needs to get above is 2120. And if it does that, Audrey, then 2198 becomes its real price target of resistance out there.
Are you talking about the cash?
I am. So as opposed to the future market, just simply to come back to the cash S&P, which is much easier, I think, for everybody to follow.
Right.
So the key numbers here to be watching are 2120. You get above that, then that's what offers the price point move of 2198.
Wow, thank you.
You bet.
Fantastic. And by the way, you are amazing. You do great work. I appreciate it.
Thank you. I think you're amazing, too. And thanks so much for calling. That was Audrey, who used to be from New York. Now she's in the Manhattan of California, Sacramento. We'll be right back, folks.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 260. S&P's up about 20 points. And if we go back just to take a look at that S&P 500, the cash index, and what's on my chart right now is the weekly chart that we're taking a look at. And in the weekly chart, what you can clearly see here with regard to the S&P 500, number one, if you go back to 2009, there's several trend lines that we can use here. But if you go back to the 2009 lows, your next trend line is going to be the October low, October of 2011. That's the blue diagonal line coming on my chart here. Those yellow arrows that you see on my screen, each of those identify the October bottoms that have come into the market. So this coming October, you really should expect the same. But we'll deal with that when we get back there. But what I can tell you is that this past October's low came right in on the trend line off of that October 3rd, 2011 swing point low. We looked at that, and we took a look at the October 2012. It really took place, it didn't take place in October, it took place on November the 12th out there, close enough to an October low out there. And we can see that price came into that trend line. Now what we're focused on really is horizontal levels of support and resistance. And last week, what price did, not amazing to anyone, is when price breaks above these levels, these horizontal levels, they act as support or resistance. Why? I don't know, because these are things that just simply were formed all the way back. In fact, in the case of the S&P 500, it was formed at price points of 1265 and 1110, and you just simply take that price difference and you just simply continue to add that to build the building blocks out here of the market and what it does. And once you break above these levels, in this case here was a 2042, 2043 area, and price last week got down to 2045. Look, that's close enough. We don't use these numbers as exact. I throw out exact numbers because it calculates this stuff for us. So I can say 2120 and 2198 as numbers, but we've got to use those more as guidelines as opposed to, Johnny on the spot to the T numbers out here. But what we do know, and the way that this works here, as we can see that midpoint level of 2120 is acted as resistance on the weekly chart. It began resistance February 23rd, lasted as resistance the week that began March 2nd, as well as March 16th, even as well as last week out here. So we know that that's the next level up at 2120. Once we see that level cleared, it doesn't have to act as resistance, but oftentimes it does. Once we see that level cleared, that's what gives us the clear ride up to 2198. Now, clear ride doesn't mean necessarily a one-way ride, but it does mean that we ought to see the S&P 500 move to that 2198 level. As you know, the longer-term charts for the S&P 500 call for the completion, and this really was a part of the question that Audrey from Sacramento was asking. But we didn't really get to it. The completion of any kind of significant top that might come place when the S&P reaches its monthly consolidation breakout price move. I'm not saying that it will, but 2350 really becomes that target, and 2350 is really just kind of a guideline, right? But if we look at the level above 2198. In fact, let me make it easier so there's fewer lines for all of you that are watching on Tiger TV out here. So let me come back. Let me turn off the midpoint lines out here, and then we'll just see just the solid lines are the real significant lines of horizontal support and resistance. You'll see that in essence tops out at 2353. Now, these lines here have nothing to do with the consolidation pattern out here. This is doing nothing more than taking a look at an open and a close for each weekly cycle that is out here, and utilizing the largest number of those in order to calculate our horizontal trading ranges, and then taking that price point, that equidistant, and adding it to the top and the bottom to come up with the next levels of the house. But what we do know is we have a longer-term monthly chart consolidation breakout projects 2350, and we have a weekly chart that shows a resistance level of 2353. Maybe then is when the markets start to see any kind of significant correction. I'm not at this stage prognosticating that. I'm just saying, hey, we got the completion of some patterns, and maybe we want to pay closer attention as that takes place out there. So we looked at the composite. We looked at the NASDAQ. Let's just simply go take a look at the Dow, see what it's doing with regard to its weekly profiles out here. Not market profiles, but instead horizontal levels of support and resistance, just taking a look at those areas, and we can see that inside of the Dow, 18,291. You see, we've got to stitch all of these together to help us and understand what the markets are doing. So at that 18,291 level, that is the next area of significant resistance. It has acted as resistance. We've seen key reversal weeks inside the Dow. We had a little doji the week that began February 23rd. We had a key reversal week the week that began March the 2nd. So if that level gets taken out of 18,291, number one, an area of resistance, just simply with regard to Japanese candlestick charting, will have been taken out, and price will have gotten above a horizontal level of resistance, which then should become new support. And that says that we should see the Dow move up into the 19,410 level out there. And those are the areas for us to be focused on and paying attention to. Now, let's go take a look at some of the sectors inside the S&P 500. Let's look at at least the top three. Maybe we'll take a look at the energy sector as well out there, which I think is the fifth weighting. But the technology sector, the XLK, let's go see what it is doing out here. And the XLK came down and tested the C point, and it's formed a new C point out here. Let's get rid of that. What it did was it came back and it tested the swing point from March 12th was 41.29, 41.26, March the 13th, which had volume of 15 million shares, and it was tested. How about that? So the number one weighting, remember we looked at the IWM, and the IWM had come back to a breakout area and it tested with light volume. I didn't realize this till today. The technology sector, so the number one weighting struck, the S&P 500, I believe it was, that swing point was tested with a bit more volume. We can go back and take a look at that. But I know it wasn't lighter volume like the IWM. I know it wasn't like massively lighter volume like the IWM. But if we look at the number one weighting structure inside the sector inside the S&P 500, its swing point, which was from March 13th, that had 15 million shares. That was tested with 9 million shares. Pretty interesting. Something to think about. So that was a failure inside the technology sector, inside the S&P 500 on lighter volume. So now what do we know? Well, we know that there's resistance. If we take a look at that task market profile, just simply with regard to the way that the box is established here, where the blue line, the red line, and the green lines are, that's a pretty stiff resistance at the price level of 41.98. We've seen a intra-session high today of 41.90. So the key number to be watching for change in trend here inside of the XLK is going to be a close above 41.98. If you do that, Then you make a run for these doji tops out here from March the 20th. But really, the message here is if you can't bust them down, you try to bust them up. And busting them up inside the technology sector says you get back to the March 2nd area. That's somewhere between 43.10 and 43.46 out here. But first, you've got to see it clear 41.98. But the technology sector could not bust out those lows, could not do it with any kind of volume. Gave us some reversal out there. Let's take a look at the financial sector, the XLF out here. Let's go see what it is doing. The XLF came back and tested the swing point. This is from March the 10th. That had 40 million shares, and its test was on, interesting, 32 million shares. I should have done this a whole lot earlier out here because we've now seen the XLF is number 2 or number 3 out here. Well, we do know it's a large weighting inside of the S&P 500. So now we've got a second sector out here that came back, tested a swing point, and did it on lighter volume. Again, that lighter volume was testing 40 million shares, and that test came in with 32 million shares. Test and reject. Now, the financial sector not as strong as the technology sector. If we take a look at its TAS boxes, so a key level here for the XLF to get the hurdle that it now faces is closing above 24.36 out there. If it can do that, its message is clear that it'll go test the swing point high from March 23rd, somewhere in the 24.57 to 24.78 out there. So now let's go take the culprit here with regard to volume. Clearly was the XLV, had to be the XLV. I don't know that to be the case, but watch it prove me wrong out here. If we take a look at the XLV on Thursday, it was moving down with 18 million shares. Now, 18 million shares was actually going against 12 million shares. Let's see, where was the swing point low? The 10th or the 11th? The 10th was 71, 70.96 was the 11th. 7.5 million shares down there. It never got down and tested that swing point. But you can see that in the technology sector, and we do know that it was the biotechs inside the NASDAQ. Now we're looking at the S&P 500 here, but we know that inside the NASDAQ it was the biotechs that just simply I went ahead and were smashing away at the lows. The healthcare sector, the XLV, was also moving lower, but it was not able to take out support. It never even got down to support of its TAS market profile. Nonetheless, if we take a look at this here, we can see the way that this box is set up. It's set up that says that, hey, sellers are really in control, but they're not really in control until the 75.06 level. 75.06 gets us back into the March 20th swing point. That March 20th swing point, although there's 74.48, 9.5 million shares. Let's see what happens as price moves up into that area. If it's moving up with more than 9.5 million shares, the top ought to be tested. That is at 76.01, and that is inside the XLV. Let's go take a look at the energy sector out here. And the energy sector, the XLE, let's go see what it has done out here. The XLE, what did that make that seventh inning stretch to the downside? I don't recall. But here's what we know about the so-called weak sector out here. It's up above its TAS market profile resistance level, which now acted as support. We saw price move above it with conviction. This was done on March the 18th. Wide price spread, accelerating volume. That was with 27 million shares. Last Thursday moved back. Last Thursday didn't even move back. Let's see. This is Monday. This is Friday. It actually had moved to higher highs with 15 million shares out here. Looks like the energy sector. Let's take a look at retracements. Let's go see what it's done thus far from high to low. It's headed to 79.14. That's going to be your 0.618 retracement level out here. But in the energy sector, maybe this has actually formed a bottom out here. Nonetheless, next move inside the XLE ought to be up to about the 79.14 area. And that takes care of 4 of the 9 sectors with inside the S&P 500. Let's go looking elsewhere for any clues out here. I didn't cover gold and silver. Just as last week, I believe that the markets were going to be forming their next bottom, which I thought would likely take place tomorrow. I was wrong. It took place on Thursday out here inside the markets. Gold and silver are also in the process of forming a bottom. Now, I can't be date specific with regard to gold and silver out here. Instead, we need to really be pattern specific out here. And so from a pattern specific standpoint, there's really 2 levels that we can be paying attention to. Again, this is the June contract. That's the active contract inside of gold. If we take a look at the low from March 17th to the high back here on March 26th, we can see that price is now just kind of squeaking below the 1190 area. You're trading at 1187. That's really kind of a squeak. We take a look at gold. This says that what is likely to have happen is gold's going to pull back to 1172. At 1172, you're at the 0.618 retracement. At 1172, you're also at your TAS market profile resistance level. That should be the first area for us to be pegging for where gold may make a bottom. And if it does that, that's the place to go ahead and fire away. I do believe that that gold is forming an A to B equals CD to the upside, and it's in the process of forming a bottom out here. Same thing with regard to silver. If we take a look at a couple of gold equities, looks like we have a mixed bag out here. If we look at Rand Gold, ticker symbol GOLD, it doesn't care that gold is pulling back $13 as we speak right now. Rand Gold here formed a little doji on Friday. It was flirting. It's been flirting with its TAS market profile, which is set up more for bullish mode out here. Nonetheless, it's trying to get back above that resistance level of 71.60 out here. Volume today, 208,000 shares. It pulled back on Friday with 700,000 shares. We've been trading for an hour and 15 minutes. That's pretty decent volume out there. That's ticker symbol GOLD. In the face of gold pulling back, that looks pretty darn good. If we take a look at Gold Corp, that's off 7 pennies with 2 million shares out here. That's really not a big pullback. Now, in the case of Gold Corp, this is kind of interesting. Let's take a look at it. It is actually testing its most recent swing point low from the trading session of March 11th. Now, that swing point had 9.2 million shares. Friday, only 7 million shares in the pullback out here. Today, 2 million shares, a bit hot, but maybe selling will pull off. So we are seeing a test. Ideally, what you'd like to see today is you'd like to see Gold Corp close where it's at, which is above the market profile low, which is at, what is that, 1830, 1829. So you'd like to see it close above 1829. You'd like to see it do it with less than 9.2 million shares today. You'd have a rejection of a swing point. You'd be back up above support out there. Now, with regard to Gold Corp, it's really nothing more than a trade because you've got some pretty stiff resistance at this level right here. This had a downdraft from the trading session of March the 6th with 13 million shares. And so this is basically in a trading range. But it's a nice trading range because your stop just needs to be a close below 17.91 with potential exit at $20.03 out here. It just depends on the volume as it were to come into that level. That's what's going on inside of Gold Corp. Let's take a look at what else do I have? Let's take a look at Goldfields. GFI is the ticker symbol. Let's go see what it is doing out here. Not too shabby. This thing had a nice breakout. I don't know what was behind all that volume. Maybe somebody in the den knows. I don't know if there was a remix inside one of the ETFs out there, but nonetheless, on March 20th, big volume to the upside, 12 million shares. Friday, pulling back into that breakout with only 5 million shares out here. Goldfields, should be pulling back basically into a level of support. Right now, we've got the Dow up 257, S&P up about 20, Composite up 34. This is Steve Rhodes with TFNN. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's up 268. S&P is up 21. Let's switch over and take a look at some monthly charts out here. Obviously, the month does not come to an end until tomorrow. Let's take a look at the NASDAQ composite. We can see that 5132 mark. That's the 1999 2000 high out here. I think it was March of 2000? Yeah, I think so. And but anyway, what we really want to focus on here is the candle pattern out here. Not even anything close to any kind of bearish reversal signal on a monthly basis. So that says at that 5132 level, we know we're watching 5055. Any close above that, and then the 5132 will get taken out as well out there. But and we're in the favorable seasonal cycle. I mean, we're really in it now as we come to the end of March out here. All my kids have, in essence, graduated from college. I've got one that's in the last semester and more on a holiday. She's already got work job lined up. She got offers from companies in California, companies in Washington, D.C., companies in Florida, all over the place. So she had her pick of the litter out there. And then my other daughter, she's working, on her career as a math teacher, so she's all set there. And the question was, there's a lot of technical things that I talk about. For me, it's just kind of now nomenclature. Talk about the lightning bolt pattern, AB equals CD, and swing points. And for a lot of people out there, they're like, I don't have the time to even understand. That sounds like foreign language, or even Fibonacci retracements. People are just like, blah, blah, blah. Really? And even my kids, it's kind of like, how do I teach them so that when I am long gone, that they have some type of tools to better help understand when they should be putting money to work, when they can see changes in trends, things along those lines. That really was my goal and my mission out there. And that's when I started doing the study, the reason why I can say that we're in the favorable seasonal cycle is because I've looked at the data for the last 82 years. Now I know exactly what the markets do from a pattern standpoint, in up markets, in down markets, and so forth. And really, I generated that. And these tools are part of the newsletter service, Mastering Probability. So if you don't have these tools and you'd like them, you do not need to be a technical trader. All you need to do is come over, sign up for my newsletter service. You can print them out there at the bottom of my expanded edition out there, and you'll have those for life, for yourself as a roadmap or for your kids. And really, it's all about us helping the next generation, right? And so I've printed those out so that they know, they can see with conviction, they can understand what the market is doing. They can take a look at a line chart out there very easily to understand, is the market continuing to form its normal analog, whichever one it is. They know different data points to look at. And I can tell you right now, we're in the favorable seasonal cycle. We take a look at monthly charts out here. We've seen for a while where the sellers have tried to take control of the market. They can't. They have no energy out here. If we take a look at the S&P 500, there's no bearish reversal signal. The monthly S&P says 2213 as its next move on the A to B equals CD pattern to the upside. If we take a look at the Russell 2000, here's a thing of beauty. Russell 2000's candle isn't even close to any kind of bearish reversal signal out here. It's actually moved higher for the month, and we know that it's got a price projection of 1350. You're at 1250 right now. That's at least another 100 points inside of the Russell 2000 as it wants to move to the upside. If we take a look at the New York Stock Exchange, the wider swath of the market, we can see no reversal signal here whatsoever. Its A to B equals CD says 12,185. Finally, with regard to today's action, I do not know how the day is going to end, but I can tell you that right now, we take a look at the summation index for the Dow, for the composite, for the New York Stock Exchange, which is even the better indicator of all, that it is now in bullish territory again. We've got its price oscillator back above the zero line. Folks, thanks so much for joining us here on Magnificent and Magical Monday. But stay tuned. Our next Magic Man, Basil Chapman, will be up next. Then we got Larry Pesavento. We've got Daryl Martin, David White, and the Tom O'Brien Show. Have a great Monday, folks. Look forward to seeing you tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.